Welcome, everyone. My name is Max Ukrupina. I'm the CEO of Float. We're the credit app for couples. And we're here today talking to Tiera Byrd with her group. She's a financial consultant, advisor. She's awesome with her company, Forever Frugal too. So let's jump right in. Let's talk about you. Tell us a little bit more about what you're doing right now and how'd you get there?
Sure, absolutely. So, hello everyone. I'm Tiera Byrd, founder of Forever Frugal 2. So, I'm a money coach with Forever Frugal 2. And I started Forever Frugal 2 back in 2014 with the simple idea to share tips and tricks on how I manage my finances and how I just love the topic of money. I love the conversation. The conversation started, I want to say, probably when I was about 8 or 9 years old. My dad would give me $20 for every A that I brought home. So my goal was to bring home as many A's as possible, to get as much money as possible, because I just felt like having a lot of money at that age was amazing. I could buy toys, I could do whatever I wanted to do with it. And then in college, I realized there was something called student loans, which I didn't really understand how they would affect me until 6 months before I graduated from college. At that time, I decided to move back home, cancel my housing application, cancel my meal plan, because I saw my student loan balance, which I have to start paying back 6 months after I graduated. And then from there, I began to create the Instagram page back in 2014. And the rest is kind of history. And now I am a money coach, and I coach clients on the importance of having a savings account, how to create a budget, the importance of tracking expenses, and definitely talking about the mindset of money and how, what the conversation was when we were younger affects how we manage our money today, how we spend our money, and how we feel about paying bills and things like that. So
That's awesome. Not many people, well, actually, not many. Most people aren't lucky enough to have parents in their lives that promote them to have good financial habits and savings, and also monetarily incentivize them to have good grades, which is pretty awesome. But you're dealing with people on a daily basis that most likely didn't have that. The financial wellness preparation education in the United States and all of the world is pretty terrible and non-existent. And so, does it come from parents or does it come from schooling? And where are you finding that the gap is?
I feel like the gap kind of starts with what you were taught at home, and then kind of trickles throughout life and throughout school, depending on what type of consistency that you do.
That's really neat. And, the people that you work with, I'm sure they run the gamut, right? From individuals to people in relationships, to people that are early on, later in life. What's the biggest difference you see from the people you're working with that are individuals and those that are coupled up?
The biggest difference I see is that the individuals, they don't, the ones who are not married, let's say they're single, they don't have any type of one to kind of like answer to. Like, they can create their financial plan, and they can be in full control of their plan, right? Like, they can make the decisions, but they're also responsible for holding themselves accountable. Whereas the couples kind of struggle sometimes with communication, right? Two different people are coming together, and one might be a spender, one might be a saver, and there may be a communication barrier there when it comes to financial literacy. But also, the good thing about it is they have each other to hold accountable. So I feel like there are pros and cons to both, but I feel like communication, especially for couples, is like the number one thing. Is kind of like, it's kind of like the deal breaker. Like, just being open and honest, and making sure that you're not being judgmental, and you are talking through different approaches that work for you. And sometimes it's hard to be on the same page with your significant other, but I feel like having those conversations and maybe monthly check-ins, once per week, once per month, just so that you're on the same page, you're setting your goals, I feel like would be helpful.
Yeah, that makes sense. Now, when you're talking to these individuals and couples, and, like you said, it's true. When you're an individual, you're only accountable to yourself, which is a good thing and a bad thing, right? right? No one else is watching as I make a mistake. But I can make decisions quicker, likelier than couples, but that also is not the case too. But when it comes to couples, you talk about being on the same page. And that's not always the case. And of course, the good thing is if they're talking to you, they're already on the right track.
Yes.
But when do couples typically breach the subject of finances, and when should they?
That's a great question. I feel like a lot of them reach the conversation of finance when they have an argument, when there's like that first disagreement. And I feel like it's important to talk about finances. Well, I want to say it depends on the person, but for me and my husband, when we were dating, we talked about finances within the first year when we knew that we were going to get serious. We really, really were interested in each other. So I definitely say within that first year, just having that conversation, like, what were you taught about money? Are you considered a saver or a spender? If so, why? And just kind of creating like a fun conversation at first so that other person doesn't feel like, oh my gosh, like this person is the finance police.
Yeah.
Because I feel like that is a lot, right? We have our idea of what we want our lives to look like financially, and then someone else comes into that picture, we have to make an adjustment. Sometimes an adjustment is not fun, but looking at the big picture is important because you want to know how it can benefit you in the long run.
That makes sense. And what happens? I mean, how do you talk to your clients when the husband's a spender and the wife's a saver, and their way of viewing money is not diametrically opposed, but just a different way of looking at money?
Husband's good with math, good with numbers, good with kind of like that overall money management, and the wife is not. Then figuring out what the wife is good at. What is she good at? What does she like to do? Maybe she wants a hands-off approach and maybe one check-in per month just to make sure that you all are meeting your goals. Then that's what she would focus on. So focusing on the strengths and talking about areas of improvement, but letting people, kind of pick what they want to do, what's the fun part, and let them do what's fun for them.
That's seems like the right approach.
Yeah.
Like historically, it seems in older generations, they were getting married much younger, right? Right in their early 20s or even earlier, where they had less time to make good and bad financial decisions, right? No one's really too much in debt. But now, the people are coupling up and getting married much later in life. So with that, you're bringing on, again, good habits or maybe some past bad habits, and sometimes good debt, bad debt, right? How should couples deal with that in terms of combining it? Some people think you should just keep it separate, but a lot of people think you should merge it, and now you're with a happy household.
This is going to sound very, 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 very cliche, but I think that it depends on the couple. So to give you an example, when my husband and I got engaged, we talked about, if when we plan to get married, if we would combine our finances or if we would keep them separate. And a lot of our friends were like, you guys should get a joint bank account. You should have a joint bank account. You should do this together. You should do this. And we tried that and it did not work for us. And I'm like, oh my gosh, this is not going to work. Then our finances are going to be a complete mess. But actually, it works out better that our finances are not combined. So like the household expenses, we have those combined in one account. But for like, if we have car notes and student loans and cell phone bills, things like that, we handle our personal stuff separate, but we do have the household expenses combined. And we see that works for us. So when I'm meeting with couples, I tell them, like, don't feel like you have to subscribe to what everyone else is doing because you're not everyone else. Everyone else has different strengths and weaknesses, and what may work for them may not work for you.
So on keeping it separate, so your husband brought on debt, you had student debt. How do you deal with that in terms of like, right, a student loan has a different interest rate than a credit card, right? So how do you, as a household, prioritize those different debts to pay off? Because $1 in is the same, your earnings and his earnings, but $1 out is different on what you're paying down.
I think for me and my husband, we kind of look at like, do we want to pay off our student loans? Because a lot of people want to pay them off and have to, take aggressive measures to do that. And right now, we are in the place where we want them paid off, but that's not like our highest priority. We want to pay down other debt that's
Totally.
with a higher interest rate, like our car loans and maybe like some credit card bills. So we literally have that conversation once per month. Like, what debt are we focusing on this month? What is our plan of action to pay it off? And then once we pay it off, what is the next thing that we're going to focus on? So for me, it's my car note. For him, he has some old credit card debt from years ago that he kind of wants to kind of focus on, and that's just what he wants to do. So it's not like we have to be on the same page there, but we try to be intentional about looking at how paying this off will affect us 5 years from now, 10 years from now, and then we also we were talking about like life insurance and investments and things like that. What we want those to look like too, that kind of comes into play. So we're not always on the same page of let's pay our student loans off now. It's typically like, what do we feel comfortable, paying off, and then how is this going to affect us in the future? I'm not one who says you have to pay. You have to pay off your student loans like ASAP. You have to move back home with your parents and double up and triple up on your payments because that's just not feasible for everyone, right? And I want people to not be stressed out in the process because when they're stressed out, they tend to not want to like track their expenses, create their budgets, and it typically just is not a win-win situation for them. But for me and my husband, we kind of figure out what we want to pay off per month based on our goals, and we have our separate goals, and then we have a few goals that are together.
That makes total sense. Yeah, and you're right. Like some people chase being debt free as soon as possible, and they can have that,
Mhm.
peace on life, literally. But it doesn't make
Right.
a lot of times it doesn't make that much sense. There's a reason why there's some good debts out there, and if your money's better spent elsewhere, uh,
Right.
then it or invested or whatever, and you get a higher rate of return, it's okay.
Right. Yes.
Um,
Yes.
it's okay. But again, that's not for everybody, and some people don't want to live that way, which is probably right in their for their
Right.
world.
Right.
Um, so that's really cool that your husband work it out. So obviously you're a financial coach,
Mhm.
but in your own household, right? Are you 100% wearing the financial hat?
It's about 60-40 now. It used to be like 80%, but I've actually kind of talked to my husband about like what are some things you like to do. So if I need him to like go over a budget or calculate some large numbers or expenses, I try to include him on that because I feel like that's where we will kind of benefit the most with both of us being included. So as far as like combining finances, I pretty much pay majority of the household bills. He will contribute whatever he needs to contribute to the house account, and I pay those bills. Like I love being in control, but I also think it's important for him to understand what's going on. In case something happens to me, he can still take over the finances.
That's cool. Um,
Mhm.
and so you know, you guys talked about it within the first year of you guys dating. What it can be a very uncomfortable conversation.
Yes.
As we mentioned before, you're sometimes made some bad habits, in the past, or you have some debts, which, having any debt, it can be an uncomfortable conversation. So how do you're a money coach, but you're probably also, a psychologist, psychiatrist on the side too, or therapist, excuse me. You're probably a therapist. What are some tips and tricks you can give to couples who maybe haven't had that conversation yet for a variety of reasons? Their tools, or what do you recommend?
Great question. Um, and you said for couples, tips and tricks for couples. Um, Hmm. I would recommend them to start the conversation by kind of just jotting down some of their goals. Just goals. It doesn't have to be a financial goal, it can be a life goal. And kind of talking to their spouse about, how they can work together to reach that goal. And then looking at if that conversation is, it's a great conversation, no one is feeling some type of way, and then saying, how do you feel about if we kind of talked about finances? Finances is important to me because of X, Y, and Z. In the past, I've made these financial mistakes. Growing up, this is how money was um, discussed in my household. I want that to be different now, and this is how I would like to do that. And then getting the other person to share some of those same things and moving at a rate that you're comfortable with. So if, they're not ready to have that conversation, which some people aren't, saying, well, how do you feel about, having this conversation with the money coach or with the or, meeting with a therapist or someone like who can mediate and kind of make that other person feel comfortable. Cause I feel like that conversation has to be had. And because it's not had, that kind of creates a lot of financial confusion for a lot of people. So I would say just be open minded, not judgmental about it. If there's someone that you trust, whether it be a money coach or a family or a friend, to kind of like share an example or an experience, or just to be there to sit and listen, allow them to, join you two on that, because you have to kind of start from somewhere. And, I feel like so many people are ashamed of talking about finances. And I think, we need to talk about it more. That's the reason why a lot of people struggle with it because we're not talking about it,
Right.
talking about the root problem. And, if your parent lived paycheck to paycheck or if they had to take on multiple jobs, like these are real conversations that we need to be having with each other to change the financial trajectory.
Got it. That's super helpful. And Tiera, are there, obviously the best way is to choose you as the financial coach. But what are there like tools out there that you recommend for individuals or couples that have been helpful as you've seen? So
Yes, there is an app out there and it's called Mint, and it's a great app. And a lot of my clients have used that app. You typically have to connect it to your bank account and it kind of does a budget for you. And it sends you like weekly updates of like, hey, Tiara, you spent $500 at Target this week when your budget was only $400. This is what you should do going forward. So it actually creates the budget for you and shows you how much you spent, which in return holds you accountable. So Mint is a great app. Um, there's an amazing book that I recently read that is super, super helpful and breaks down money, super, super simple terms, whether you're like a beginner or you're an expert. And the book is called I Will Teach You How to Be Rich by Ramit Sethi. That's an amazing, amazing, amazing book.
but we talked about earlier, financial wellness and financial education is pretty dismal. Most people don't want to talk about it. Or parents didn't want to talk about it because they made bad financial decisions and they're living paycheck to paycheck.
Right.
How should parents be talking to their kids about finances? Should they be transparent?
Yes, I believe that parents should be transparent and, hey, this is how I manage my money. In the past, I did great at this, or in the past, I made these mistakes. Because I think when parents are transparent with their kids, it then prevents the kid from making the same mistake. So I feel like that's how you kind of break that cycle. So I do think it's important for parents to be transparent, open, honest, and even if they're still having mistakes, like, oh my gosh, I'm still living paycheck, even for like the last 10 years or since you've been little, and I'm trying to work it out, has not worked out. I don't want this to happen to you. So going forward, make sure you do these things. So being transparent, I feel like is the best way to kind of educate the kids.
Transparency, a plug for our app is that we are the only app that allows couples to link up and so they can keep track of each other's credit reports, right? So
that's nice.
Yeah, so if you and your husband have, like you said, separate student loans, separate credit cards, they're there, but with our app you can see his balance and also make sure he's improving. Transparency is key, right?
Yeah.
We did a big study with a lender in Harris Poll recently, and 76% of people in relationships said that they would lose trust in their partner if they hid a financial account. And the same survey came across that 54% of people had hidden an account or something financial from their partner. So there's a lot of people that are not guilty of that, but are clearly doing it. And you talk about different types of spending. Are there some things that you love so much and he loves so much that no matter what, you guys get a free pass on spending on? Some people say it's flowers, some people say it's shoes, some people, whatever it is.
Yes. So my husband loves sports. His friends talking about sports, me grabbing a beer at the bar. That's kind of like his one thing he does weekly. Um, that's just, it's not negotiable, but it's one thing that he does. So, maybe that looks like one day he can um, treat himself to the sports bar and dinner there and a couple of drinks. And maybe if, we have a random unexpected emergency, he can still go to the bar, but maybe not spend as much money. So that's what it looks like for him. For me, honestly, I don't think there's something that I just have to have per month. Actually, no, it's really not. Like making sure that we have enough food to cover the month and we can pack our groceries, cars are filled with gas. I don't really have anything. Now last year it was making sure I was able to get my nails done, get my feet done. But this year it kind of changed. I'm just like, just want the basic necessities. It's not nothing I have to have. That's a
You
great question.
you're still not getting those mani pedis?
Well, I am, but if a month goes past and I'm not able to get it, it's not the end of the world because I am like super, super like almost addicted to investing my money and seeing it grow. So I'm like, "Ooh, I want to put this $50 into that account." So yeah.
Yeah, having that kind of attitude mentality is huge, and
Yes.
obviously shows. Where are you investing your money right now? Where's the
So
better?
I have a Roth IRA with Vanguard, which I started a few years ago. And now I'm probably looking at a few stocks to invest in, but I'm so like connected to the Roth IRA at Vanguard. So I invest currently in a few mutual funds, a few stocks, looking at a few bonds, and I'm actually new to the investing. Like I feel like I started this probably about 4 years ago, and I'm just starting to kind of like get my feet wet and feel really, really cool with that. But I have been looking at different types of investment vehicles. But right now, funds and stocks, a few ETFs. I'm looking into real estate. So I'm just doing my research and figuring out what works best for me and my goals.
That's super cool.
Yeah.
That's super neat. Um,
Yeah.
well, any more? I mean, you're great. I love what you do, and
Yeah.
helping people out, and you got bit at a young age,
Yes.
far younger than most people do, and being able to share that passion,
Mhm.
it's super cool. Any, top other things that we may have missed that you wanted to tell a prospective client or someone that maybe struggling to get their finances in order, or especially couples?
The end result, setting your goals, making sure they're realistic, and creating some type of vision board or some goal board, and constantly looking at the end result and how you can get started. So many people don't want to get started because they're like, well, I need to make more money to get started. I need to wait until next year because next year is going to be different from now for some reason to get started. I think it's important to just get started and start where you are, where you at with what you have. Because if you are able to manage your finances on a $30,000 a year salary, then you can do it on $100,000 a year salary. So many people feel like they have to make more money to take control of their money. It doesn't work like that. Because you can make $100,000, $200,000 a year, but it doesn't matter what you make. It's about what you keep to save and invest. So I always say start where you are with what you have, and don't compare yourself to anyone else. So I just wanted to add.
Yeah, I think that's important. Is that you could start the earlier the better, and
Yes.
comparing is terrible, and especially
Yes.
in modern times when you have people living beyond their means, and posting on social doesn't help.
Yes.
Like, oh God, they're
No,
having
it
so much
doesn't.
fun this weekend. Why can't I? They got this new car. Why can't I?
Right. Social media is not reality. Social media is not reality. And trying to keep up with Jones is not ideal because the Jones are probably broke and they have credit card debt up to their necks, but they're not showing that to people on social media because they don't want people to see that.
Totally. Absolutely. So
Mhm.
I want to make sure you get a plug in. So tell us about your different properties and uh, what content you're making and how they can get in contact with you.
Sure. So I have an Instagram account. and it's Forever Frugal, the number 2. I also have a Facebook account, but I'm more active on Instagram. My email is foreverfrugal2 spelled out. So foreverfrugal2@gmail.com. I offer one-on-one coaching. I offer group coaching and accountability sessions. I also offer budget reviewing. And then on top of that, I offer a free discovery call for anyone who is interested. Or if you just have a question, I am super open and honest with clients, and I love answering questions. But yeah, that's a little bit of what I offer. Everything is listed on my website, foreverfrugal2.com. And definitely look forward to sharing some more money advice. I share lots of different tips and tricks on my Instagram. But yeah.
Well, awesome. Tiera, I really enjoyed our conversation. Really glad you're spreading the message and love your passion for getting people's financial lives in order. So
Yes,
we're on the same page.
absolutely. Yeah. Thank you guys for reaching out. This was fun. I love talking about money. I can do this all day. I appreciate it.
Good. Good. Likewise.